This is the weekly charting analysis with myself, Jasper Lawler, representing London Capital Group. Thank you very much, everyone, for attending today's webinar. As most of you will know, but just for the few newbies, we're basically going to cover the charts of the major markets operated through LCG. Shouldn't take long, 15-20 minutes if we're efficient, just to have a look at the kind of major trends, slightly higher level analysis, just to set us up for the kind of directions and moves we could expect, even if we're trading short term throughout the week. Any questions anytime, please just pop them through this questions box, be it news of the day, charts you're looking at, setups, etc. I'm happy to obviously help. But if not, sit back and I'll just give you my overview of what's happening in the markets at the moment. So let's jump over to the LCG trading platform. I trust that you all see my screen okay. I did check the audio earlier, but I'm assuming you can see my screen. So it's on Brent crude at the moment, but let's just jump over to the traditional way of doing things here is the currency markets first, then the indices, and then commodities last. So this is the daily chart for the euro against the dollar, euro-dollar obviously. It's a choppy sideways market and we pretty much struck 118 and rolled over from there. But what's interesting at the moment is I had this down-slipping trend line. We had a little false break, but it did seem to be affecting the market as we bounced and went up to that 118 level. Having pulled back, it looks as if the combination of the 50-day moving average and the 116 level and this broken trend line could be contributing to a bit of a bounce off the lows here. Now, we are in a range, officially, range-bound trading, so you're looking at more likely setups down below what I've marked as this kind of, apart from this kind of major false break we're looking at here, potentially, we're looking at 115.27. I've got it down as anything in that region from 115.10, I would say, and upwards. That's your bargain area if you are buying down the bottom of the trend. But if we are thinking that maybe momentum is shifting here, now there is some basis for thinking that, because obviously this was all, benefit of hindsight. We can see this was a nice big downtrend in the euro. Throughout that entire time, we had this consolidation phase over here, obviously. And throughout this entire consolidation, the down move, the consolidation afterwards, the little leg lower, potentially the longer term false break, we were always below the 60 level. So typically when you're looking at the 14-day RSI, you define a downtrending environment as below the 60 and anywhere down into the oversold territory. You could even say 65, some people use. So we have popped up above 60. If I draw a line in there around 65, you can see we're not quite out of the 65 mark. So you can see how this is, subject to interpretation. But basically, it looks like after this prolonged period where we didn't even get above 60, we probed 60, pulled back, didn't get anywhere close to that low, basically stalled around the bottom of the range, ran up, and understandably pulled back from 118, which was, these bunch of closes over here, this peak here, acted as resistance in this kind of horizontal range. But it's not automatic that we go back down to test 115.10. If this change in momentum is going to continue, maybe this could be an area that we start to see shift. It looks like as of today's candlestick that we're getting a bounce off the lows, but the day hasn't closed yet. So I think probably the approach here is see how far we close off the lows here. If we do get a positive close today in the euro, to me that would be a good sign that this positive momentum is here to stay, and that actually we're looking at potentially a bounce off that broken trend line. Switch gears to sterling. Now, a bit of a different picture here. This is the weekly candlestick chart. Now, if you look on the daily chart, it looks similar to the euro, but just looking at this weekly chart, it's not something I feel too confident about buying into this. Look at these two weekly reversal candlestick patterns. two pretty clear-cut weekly reversals right into that 20-week down-sloping moving average. This is all fairly characteristic of a sell setup, a longer-term sell setup. So even if we don't go back eventually down to challenge the 126.70, it seems like a bit more weakness is due. You know, at least a little probe down to 128 perhaps before we can look at this strength that emerged here after this long period of weakness actually continuing. So basing off our longer term charts and then moving down to our you know, our kind of more trade trigger type charts, seems to me that we're looking at a period of weakness. And if you just see here, this is basically the, you know, we had a new high, lower high, and now we've made a lower low. And obviously we're coming up and we're kind of probing this low here. So it was support, obviously now it's potentially acting as resistance. I can see we maybe do move above here. This is about 130.50 if I actually draw in the proper horizontal line here. You can see we're about 130.55 actually. We bounced off there, pulled back. You know, there's that would be the first area that we could roll over from, but obviously we could probe up to 131 again for those looking for round numbers. Maybe, since you could see this as a bit of a kind of dip buying, you know, if you're still viewing this as an uptrend, you know, you're not, you know, for those who are discounting these lower lows and lower highs, people who are buying into this, what would be deemed as a dip in this little uptrend environment, could still push the price higher. But I don't think it goes much beyond 131. So let's see how today's candlestick pattern works out. It was pretty bearish throughout the last 3 days of last week. So we wouldn't be surprised to see a bit of a retracement. Maybe let's have a look at how far we can retrace this latest down leg. You can see the 50% somewhere in around that 131 area. So maybe we get a bounce up to there. But if we close today lower, that to me would be probably news enough to signal that we're heading lower for the next few days of this week. Yeah, Roland's asking about the Tory Party conference. I think that's certainly well up there, Roland, in terms of the drivers here. You know, obviously Boris, a major challenger to Theresa May. No one's really buying into this kind of checkers deal, and obviously I don't expect the Tory conference to really be any kind of massive symbol to us about where Brexit is headed. But I suppose what you could take from it is the degree of unity within the Tory party. If Boris does go for broke, which I think tactically for him would probably not be the way to go. Obviously, if he is going for the leadership, he needs to strike at some point, but maybe early days with 6 months to go. You know, obviously, if there was that complete divide, there'd be a sense that, well, okay, you know, what's the point in even taking anything to the EU? When the Chequers deal was already disagreed, what's the point in taking that to EU if it can't even be agreed among the government? So obviously that would just add to the uncertainty if there were massive sign of disunity. But as I said, I don't think there will be, and maybe that's what we need to get a little pop up to 131 before we roll over again. Rolling over, what would be the cause? Obviously, you can pick any number of things, but I think probably strength of the dollar when it comes to sterling being one possible driver. But let's see. Obviously, we've got two different kind of ideas here. Normally, you like to see the euro and the pound kind of moving in the same direction against the dollar. In this situation, we've got a potential bounce maybe in the euro, whereas maybe sterling heading lower. So it's one of those situations where maybe if you get the timing right, you can actually kind of place a trade in both, be kind of hedged, and at least one of them will kind of pan out. All right, let's switch gears to dollar yen. So this is something we've been quite bullish about, and deservedly so. We've been talking about this broken trend line for a while. and we're finally getting some legs off it. And so we're probing up. We hit 114 today. Obviously, this weakness in the yen is affecting the Nikkei. I can bring that chart up for you to see, but we actually just hit a 27-year high in Japanese stocks today. So it's this dollar rising, this yen weakening, which is actually helping Japanese stocks. Yeah, we're getting a nice little run. So we're in our 4th week of gains so far, but fairly clear-cut resistance here at 114.50. I think that would be obvious for most people to see, and so wouldn't be surprised to see us fall off a bit before we even get to that 114.50 area. We hit 114 today. Maybe we probe up to 114.20, 30 and dip down from there. But I think that might just be a dip buying opportunity. Even just look at this momentum again, going back to RSI, this at least on a weekly basis, but you can see we've been below this 60 level for a fair period of time during this whole little downward trend here. And now finally, with this break above the declining trend line, it's also coincided with a break above the 60 level. So out of that downtrending environment, at least into a sideways environment now, not necessarily a bull market. Said I think 114.50 will cap us for a while, but looking for any return back to 60, any dips in this weekly chart for potential further strength moving forward. So first symbol for us will just be that old high. If we get a dip down through 70, that probably wouldn't be enough to get us down to 113 and 16, whatever that high is there. But any sort of substantial dip, maybe down towards 60, that would probably take us down through towards the moving averages. So it's a matter of what you want to go for. We are fairly overbought here, but it's an uptrending environment, so I wouldn't read too much into that. You know, this necessarily not being a market to buy into just because we're overbought. You know, that's actually what you want to see in a trend. Hopefully, if this trend persists, then what you just start to see is kind of chopping up and down around 70, and each one of those drops is a dip buying opportunity. Okay, over to indices. So we're on the FTSE now. Been a bit of a tricky one to trade for a while, but we've had a decent bounce. Obviously, that weakness in the pound, as Roland mentioned, Tory party conference, Brexit, disillusion, etc., all good for the FTSE because the weakness in the pound, good for foreign earnings, obviously. So we've had a bounce, but we've basically run into this old range support. We hit the first level here. You can see we had a little dip. That wasn't quite enough. And then we've kind of run up into where these kind of spike lows were around here and rolled over from there. I think it's a similar example where we've been down kind of in a kind of downtrending weak environment, but we probed above the 50-day moving average, probed above 60, maybe a little weakness. People sell this bounce down towards the 20 moving average again, and that's where maybe the market can bounce. So at this point, in still a kind of downtrending environment, I would expect we probably followed through with a bit more weakness. But I think that doesn't take us back to the lows. I think we can actually bounce somewhere before even the 20-day moving average. So looking for a dip first, maybe into the sort of 74s kind of area. If I draw a line in there, I can draw in 74 as our sort of base area to look for, and then see how the market reacts there. Maybe a dip through it, a close above. Could coincide with a dip down to 40 and then a close above, indicating the market's kind of done its worst. It's hit the oversold, rallied out of the oversold into above 60, ended the downtrend, and then just looking for value areas to buy back into it. Germany 30, bit of a choppy old mess as well. This is a 4-hour chart. Let me just get a little bit higher time frame than that. So you can see that we referenced this down sloping trend line before. You know, obviously this last candlestick has fallen away from it, but in the great scheme of things, we're really kind of just going sideways here. Only great cause of any kind of major market opportunity, I think, would be if we drop through this 7,000. But if US stocks are pushing high heading into earnings season, it's hard to see that 11,700 breaking. But if it does, that should be opening us up for a decent drop. But I think probably what we see is a move back up towards the top of the range around 13,200. But in order to confirm that, since this downtrending trend line's been working okay, maybe we look for a close above that downsloping trend line. It's a little simple that this little period of weakness is over. But as I say, difficult environment to trade, really. Probably better on a shorter time frame basis, given that there's no real longer term decent trends. Not such the case on Wall Street. I dropped down to a 4-hour chart here. Let me just show you the kind of basis for what we're doing there. That was the old record high. Obviously, big slump in February. Took us a while, took us 7 months to get back up and make it a fresh record high in the Dow. Just tipped it, closed down for 3 days in a row. In last week's webinar, just had us just said that we're looking for a pullback down to somewhere before that previous little peak there, and that has been what's happened. Obviously, a nice buying opportunity would be on the moving average or the old highs, but the market's bullish enough that we didn't get there. But what we have got, if you are looking for ways to buy these dips, is a Fibonacci retracement. So this was the rally here, pull back 50%, you know, 1 test, 2 tests, 3 tests, a little downsloping trend line, broke above it. So either on one of the tests, if you're braver, or if you're waiting for a bit more confirmation, and move above the downsloping trend line, this should lead to the resumption of the trend up here. And we're looking for these highs to get taken out. Okay, switching over to metals. Gold, you know, so I think it was a YouTube video where I referenced we had these 2 inside days and we were looking for a close outside of those inside days to find some direction. We had the close of the body, you know, outside of those previous bodies, but not below the lows. Had 1 day of weakness following it, and then interestingly, we bumped into this trend line that we've been drawing for, we've had on our charts for ages. Just to remind you from this monthly chart there. So, you know, what we're saying is if this monthly chart holds, we're on for a good rally up to the top of this range again. If it doesn't hold, we're looking firstly just for a drop down to those multi-year lows at around 1050, and then a fair old drop from there. So gold opening up towards a potentially decent opportunity here. The fact that we have, you know, look at this, look at the weekly declines in this, you know, back in whenever that was, 2013, when gold really started to fall off. We haven't seen anything to that extent, even though this year's been a bit rough for gold. It hasn't been massive weekly declines, monthly declines rather, been fairly steady. So for me, the first month that we closed positively, I think, especially above this rising trend line, you know, it would bode well, but we haven't got there yet. Short-term indication of strength would be a break above this little downsloping trend line here, potentially as the, you know, I've drawn it through those highs since it seems to work, or you can just have it as a horizontal level of resistance there, around, well, I think that's 12.15. 12.14-ish. So I think unless we get above 12.14 or below this rising trend line, it's a little difficult to pick your direction. But it looks still to me like there's potential for a trend reversal here. And still, last but not least, Brent, one of the best trending markets we're in at the moment. We had this downsloping trend line. You can see that we've broken above it, held the 50 level. Rallied up, you know, we were looking at potentially, we mentioned at the time, I believe, a sort of false break through these lows, held the 50 level, rallied up since there, still got more room to go, not overbought yet. So next target would be, if I just click across here, this spike low here, that was the 2014 rout in price. So this little range low here at 88.50, to us would be a natural target after this breakout, which is fully confirmed. That's the daily chart. You can see the sort of false breaks, rallied up to the trend line, pulled back, and then we're off to the races. So on a simple measurement basis, now this is probably conservative if you lose this low down to this low, a bit more aggressive, but you can sort of see from the breakout area, we're looking at somewhere up towards 88 as a potential target from this pattern. Okie dokie, I'm going to call it a day there. Thank you very much for watching, everyone. Good luck trading for the rest of the week. Jasper signing out.